Hello, this is a TradeSight stock market preview for May 23rd, 2013, powered by eSignal Charts. Here's a look at the S&P E-mini 500 futures contracts and 5-minute bars from today, Wednesday's trading. We had kind of a wild session with Bernanke speaking to Congress. We kind of gapped up here, as you can see this morning, a little bit. The first half hour waiting for Bernanke to start was fairly flat, just drifted upwards into this wall of resistance at the upper break. Value area high R1 level for our numbers, and then his comments came out and propelled the market into a strong breakout higher, which then retraced in about 10 minutes all the way back to this same area that we had been watching as resistance. Now became, as you can see, support for a while, and then over lunch we broke back into that, headed back down and filled the gap for the day, crossing all the way across the value area, and then fell even lower in the afternoon. Ended up with pretty big range. This is one of the biggest range days we've seen in a long time on the S&P. About 40 points, which is pretty huge. So let's take a look at what that means on the S&P daily chart itself. Okay, this is the S&P 500 index. We've been watching this uptrend line for a long time now. We've played off of it 1, 2, 3, 4, broke slightly underneath it, but came right back above it, and then 5. And then we actually accelerated above that level. The comments from the Fed today basically suggesting that they're not getting ready to ease anytime soon, that it probably would be disruptive to the markets. And that was initially perceived as a positive, but that and anything else that people were taking out of it eventually rolled us to the downside. What's significant about this, first of all, is, as you can see, the movement we get is what's called an outside day down. It's a big range day. We haven't had a lot of those lately. You have one big one down here back in the middle of April, but that was a straight downward day. So for this day to open, run up, and then run all the way down, it eclipses the range of the prior day. It actually eclipses the last 5 days, which is a pretty big candle, and initially starts positive and closes negative. When you get that after a run, the market, it's called an outside day down and also a blow-off top. Very significant. We take a look also at the NASDAQ 100. Okay, same type of setup here, big range day, traded about 70, 80 points of range on the NASDAQ. So this is significant. This is not something to shake off and assume it's just another buying opportunity. We'll be watching that trend line on the S&P. Let me flip you real quickly through the stocks. Also have the downward move. Everything's going to show the downward move today based on the news. And then here's the biotechs. Didn't quite have the same move here, but it wouldn't take much to break this trend line that you can see that's clearly in place right here. Some of the key stocks, it was funny, Apple was not moving at all early when the market was running up, and then didn't really sell off as much. Apple kind of contained in all this, actually closed slightly green for the session. Google, on the other hand, rolled to the downside for the session, filled the gap from about 5 days ago. So we definitely saw a negative day overall. Now, I think one of the things that's really important to notice and to discuss is the NASDAQ volume. And here's the daily chart of NASDAQ volume. We watch this religiously. This has got a 10-period moving average on it. So it's an EMA that basically weights how volume is doing over the last 10 days. And we like to see volume above 1.7 billion shares for solid trading days. We had a lot of days in March and April where that volume had kind of dipped. In fact, the average at one point dipped under 1.5 billion shares. That's very, very light. You do see it back at the end of last year and the beginning of January, but that's from the holidays. That's common. But to see it like this in April and the end of March, very, very unusual. But we have picked up since then, and you can see now the average is actually approaching 1.8 based on the last few days. And today's volume on this data point, 2.1 billion shares on the NASDAQ. Now, keep in mind, you've got heavy volume then, the biggest volume since one day back in March, and essentially vying for the highest volume day of the year with that blow-off top outside day down formation. That's really a negative for the market. Okay, really a negative. So the fact that the volume was there as well does not bode well. So this is really a significant day. I think we're going to be looking for further downside play here. We've now got 9 bars down in gold. Gold had reversed to the downside as well. And let's take a quick look at oil futures as well. Crude oil. Okay, this was a nice pattern forming for actually a breakout on crude oil, but it was down today. It hit 94.12, and so everything's down, pretty negative. We'll be watching the news early tomorrow. There are a few data points, including the jobless claims numbers and such. But again, any movement to the downside that takes out Wednesday's low during Thursday's trading, I think you're going to have to watch for an acceleration to the downside here. There's a lot of people, a lot of volume in the market in the last day or so there that's going to get stuck. The people that were buying are stuck. If this proceeds lower, they're going to feel trapped. They'll end up propelling the market lower. So we'll be calling them from the lab as usual. Hope you have a great trading day. Remember, Friday is going to be light heading into the long weekend, and Monday is a U.S. holiday for Memorial Day.